Tata Motors is on the brink of something big, potentially its largest acquisition ever. The company is poised to buy Italian truckmaker Iveco for about $4.5 billion. It's a bold move and one that echoes its past but could potentially redefine its future. Let's unpack what's at stake here. Now, Iveco is a mid-sized European commercial vehicle maker. It makes buses, trucks, powertrains, as well as electric offerings. Its parent EXOR, run by the Agnelli family, is negotiating the sale outside Italy's defense business IDV due to national security rules. The Italian government says it's closely watching and may use its golden power authority to wet the deal. Now, Tata's previous global M&A moves were significant. Back in 2008, the acquisition of Jaguar Land Rover for about $2.3 billion. Iconic, but with early financial struggles. Its largest takeover overall thus far has been Corus Group in 2007. This was India's bold $11 billion steel play. Now, other deals included some smaller scale investments. There was Daewoo Trucks, South Korean, back in 2004. Then there was Tata Hispano, a Spanish bus maker, in 2009. And then Italian design house Trilix in Turin, 80% of the stake for 1.85 million euros in 2010, primarily to bolster Tata's styling capabilities. So this potential Iveco deal could eclipse JLR in size and also impact marketing, Tata's second largest group deal after Corus. Now, for Tata, this acquisition isn't just about size, it's about reach and technology. Iveco brings electric buses and hydrogen truck expertise crucial for Tata's sustainability efforts. It adds R&D, manufacturing and distribution footprint across Europe, including a major technical center in the UK and operations across Italy. Now, Tata gains scale. Iveco gains cost discipline and access to India, Africa, Latin America. Together, they form a global factory model. But there are risks, and quite a few of them. First up, investor jitters, which were felt on the Dalal Street. Tata shares fell about 4% on BSE after the news broke, and the selling continued even for a day or two later. The size and integration risks spooked investors. Then there was regulatory scrutiny. Under Italy's Golden Power law, strategic assets like defense-linked divisions cannot go foreign. The defense arm IDV has to first be spun off or sold separately before Tata can proceed. Now, to put this in perspective, let's look at Tata versus other global auto mergers and acquisitions in the past. Let's talk about the acquisitions, the deal sizes, and the strategic outcomes. Corus in 2007, the deal size was $11 billion and it gave Tata's diversified access into steel, but it was a high-risk deal. Jaguar Land Rover in 2008, a $2.3 billion deal, gave Tata's entry into the luxury car market and also then a major comeback. And then, of course, Iveco, potentially this year, 2025, a $4.5 billion deal and gives commercial vehicle globalization for the Tata Group. Now, compared to others, let's look at Volkswagen's takeover of luxury brands, GM's acquisitions. Well, Tata's moves reflect a consistent pattern. Bold bets on legacy brands as well as global tech. So why does it matter? Well, it matters for Tata. It could be the springboard to dominate global commercial vehicle and sustainable mobility markets. Then, of course, for Europe, it's a precedent. Will one of its native truck makers be led by a non-European conglomerate, in this case an Indian one? And of course, for India, it's a statement of industrial ambition from passenger cars to becoming a global commercial vehicle powerhouse. Now, if this deal clears the legal, the political and the investor hurdles, Tata's move to acquire Iveco could be the defining acquisition of the decade, not just for them, but for the entire global automobile industry.